I think what the minute signaled was that a pause in January is maybe more likely than not. Good afternoon. Welcome to the almost full week of 2025. I say almost because the markets are closed here today on Thursday, but we still have a lot to cover. We have kind of the start of jobs week here to address. We also received the Fed minutes yesterday on Wednesday, and then a great question of the week about really kind of stemming from the wildfires in Los Angeles and how we can prepare for these types of natural disasters and one-off events that can come up. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends we're watching, and hopefully weed out a little bit of the noise along the way. And before we jump in, I do want to share again that the markets are actually closed here today on Thursday. This is for the morning of former president. And so kind of a one-off scenario here, of course, but almost a full week of 2025. But of course, we do have the markets closed here on Thursday. That said, there's still quite a bit to cover. So this week we got quite a bit of data, especially on the jobs front. So we had ADP employment report come out, and we had shown that the ADP employment report added 122,000 jobs there for the month of December. Kind of a lower number here, but the labor market, I think, from what the Fed is suggesting, there was some cracks, and it seems that the Fed is suggesting that those may be kind of patching themselves up. So it's something to really pay attention to, but some of the trends we had seen may be starting to dissipate, but again, it might be too soon to say that for sure too. So the ADP employment report, we also got initial jobless claims on yesterday on Wednesday, showed we added about 200,000, or initial jobless were 201,000. And then we also get, as a kind of the tip of the cards, tomorrow we get the US employment report. So we'll definitely want to keep an eye on that to kind of get the full scope of maybe where the labor market kind of showed strengths or weaknesses in December there. But the big thing to touch on here this week is that we also received the minutes from the last Fed meeting. And what I'll share is that this probably isn't much of a surprise necessarily based on the press conference from Fed Chair Powell. However, I think that if anything, maybe what I got out of the minutes was that it maybe is a little more hawkish than what was kind of suggested actually in the press conference. Depending on how you read, what Fed Chair Powell said, it seemed likely that a pause was coming, maybe another decrease, maybe not. But I think what the minutes signaled was that a pause in January is maybe more likely than not. Now, obviously, time will tell, so bear with me a little bit. We'll see what happens here as we get closer to the January meeting. But nonetheless, that's kind of, I think, the takeaway from the Fed minutes there. I will also share that it seemed that many Fed officials were not just thinking pause in January, but were also actually kind of on the fence of the last rate cut there at the end of the year. So it was a very narrow margin, I guess, in terms of who was for and against cutting rates there in that last meeting. And the reason for all of this is that it seems like a lot of the Fed officials are mostly worried about potential inflation impacts from policy changes ahead. So that is really kind of the takeaway in a nutshell of some of the Fed minutes there, Fed meeting minutes, excuse me. Again, very, very more than likely not, I guess, at this point, pause in January. And then again, even in the last rate cut, it seemed like maybe more were on the fence than it kind of seemed on the surface. So we'll see what happens here as we get closer to the meeting coming up. But nonetheless, it looks likely that we may be set for a pause here on the rate cut cycle, at least for this next meeting. We'll address the question of the week here in a minute, but before I do, just as a quick reminder, be sure to tune in next week because tomorrow we get the US employment report, so we'll make sure to cover that. And then we also get our December and, for that matter, 2024 inflation numbers next week. So we'll be covering quite a bit. And of course, all of that obviously feeds into everything I'm talking about around the Fed as well. All right, so as far as the question of the week goes, unfortunately, I'm sure you've seen the news. There are some significant wildfires in LA that are spreading very quickly and have damaged a lot of that area, unfortunately. So it's obviously a terrible situation. In fact, somebody in our office just moved up here from Los Angeles and has affected a lot of people that they knew. But what I wanted to try and share as a kind of a follow-up to this, I guess, is hopefully to help kind of talk through how we might be able to prepare for these types of natural disasters. And the easy answer, which of course, especially us up here in Washington are maybe not as challenged with, is that the easy answer is generally insurance is meant to help with this. However, in LA, in Florida, I think to some degree up here in the Pacific Northwest as well, there's some insurance companies that are pulling out to insure these types of scenarios from or insuring these types of scenarios. So what I really want to spend some time on is talking about what we can do, especially if insurance isn't going to cover these big natural disasters or what if scenarios that come up in life. We can tie it to natural disasters, but really everything I'm going to share could also apply to just any big what if type of scenario, right? And really what I want to focus on here primarily, there's obviously all kinds of ways to do this, so bear with me a little bit. But what I really want to focus on here is the idea of tax diversification. A lot of times, many folks have been told over years and years and years to save all to your 401k, your IRAs, take advantage of the tax deferral that comes along with it. And although that can be a great strategy, especially for many who are higher earners, even regardless of the tax savings, if all of your money goes into that account, it can create a lot of challenges if you need to ever access money in the future. So what I wanted to share is that when we are preparing for these types of events, and even if it's just an early retirement, I mean, you name it, one of the biggest things to consider is tax diversification. So obviously we may want to take advantage of 401ks and IRAs. Some people may look at Roth IRAs and Roth 401ks for some of the tax freedom that comes along with it. But one of the areas that gets missed often is just a general taxable account. And the reason that can be so important is that although you may not necessarily get some of the tax deferral benefits of the other two or tax-free growth on the Roth side of it, what taxable accounts allow for is a lot more flexibility. Now, technically, you may be taxed as you go, although there are some huge tax advantages of a taxable account that aren't there in either the pre-tax or the Roth side as well. So don't get me wrong, there's still tax advantages of these types of brokerage accounts. But the benefit is that you can put in as much as you want whenever you'd like. You can take out as much as you'd like whenever you'd like. So it's a great way to prepare for these types of big one-off expenses that could come up. In addition, obviously you may never want to go towards debt in these types of scenarios if you can avoid it. But that said, if you have taxable accounts, a lot of custodians, Schwab, I believe Fidelity, banks will allow you to actually take a line of credit against your investments as well. Again, not always is that the best solution, but nonetheless, it may provide some options to kind of bridge a short-term need if you had something like this come up and needed to kind of come to some money pretty quickly, where you're going to be able to repay it, in the near future. So again, I think the biggest thing I wanted to highlight is this idea of tax diversification, and more so from the perspective of how that can help you bridge, these bigger expenses that nobody plans, nobody wants to experience, but unfortunately do come up from time to time. So hopefully that's helpful. Obviously tragic scenario there down in Los Angeles, but hopefully this kind of gives some ideas to prepare in case something like this were to ever affect you. Coming up, we will again make sure we address the employment report and inflation numbers there next Thursday. So in the meantime, have a great weekend, and we will see you next Thursday at 3.